Okay, welcome everybody to Pinnacle chat room. I have to read through the disclaimer before we get started. It is, and here we go. It's this presentation is for educational purposes only, and the opinions expressed are those of the presenter only. All trades presented should be considered hypothetical and should not be expected to be replicated in a live trading account. Risk disclosure: futures and forex trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And that pretty much covers the disclaimer. And all right, I'm going to jump into this. And if you guys have questions while I'm talking, just mute your microphones while I'm talking and type the questions in the voice chat room, and I'll read them through there. But otherwise, let me jump into the first question DB had was setting up the trade detector chart. So I have an NQ chart set to 1 second time frame. So just open up a new chart, go to your data series, or you can do it from the drop down and select price based on last, should be default, second chart, and then 1. And then I just have 3 days loaded, but you can load, 3 days, 5 days. Don't, the more days you do, the more your computer's going to have to, calculate. So keep that in mind. For this, you really only need a couple days. This is supposed to be a real-time intraday chart. So you can leave it set to instrument settings, I believe, or you can set it to either extended trading hours or regular trading hours under CME US Index Futures. Choose the one that if you're going to be trading, after hours, you probably want the extended. If you're just going to trade regular session, you're going to use the RTH. Okay, so that pretty much covers that. Let's see here. Okay, so that's the data, and then you're going to go to indicators. And under indicators, you're going to have order flow, market depth map, and order flow trade detector. Now, right now, I don't actually see the market depth map plotting, so maybe you can leave it off for now, but if you want to add it, go ahead. And then order flow trade detectors, this is the one that you're looking at. These are the settings I have right now. I have it set to minimum volume is 50, in this case 50 contracts. Maximum marker size is 500. You can change that to like 500 or 1,000 or 2,000 or 5, whatever number you want. I just have it set to 500 right now. That's fine. You can play with the settings as you start to see the market, depending on what you're trading as well. The ES trades more heavily than the NQ. So base marker size on visible area, that should be visible. Area should be the default. And these are the colors I have for buys and sells. You can either leave that or customize it to whatever you like. Auto scale and visible, and that's it. That's all. There isn't a whole lot of inputs on this indicator. So it's the order flow trade detector. And it's right here in the order flow group. Let's see, I don't see the histogram. Okay, I was trying to see if I had a profile, but I don't. Okay, any questions on trade detector or setting that up? Go ahead and type it in the voice chat if you do. Okay, so DB, you should be able to have that one set up and running. Obviously, check it on Monday, see how it's working. All right, so let's start with the market. Let's look at, what do we got here? Let's go back to the 7th. And I'm just going to go over real quickly on here. Let me. I don't know if the VWAPs are going to plot. All right, so I'm just going to go over, let's go over VWAP first. I'm just going to show you this session. So the VWAP, I only have plotting on the regular trading session. I don't let it run 24/7 because volume weighted average, the way it's calculated, you really want it to start calculating at the open. And I only use it, this is a key, okay, because you don't hear this from a lot of traders. I only use the VWAP the first couple hours in the morning. It's not because, one, I don't like trading all day. And that's the first thing I think you guys should start to consider is, are you sitting in front of the computer wanting to trade all day long? My first recommendation would be don't. Get out of there as quickly as possible. So you're going to focus, if you're going to focus on the open, trade the first 1 to 2 hours. You either hit your goals or you don't. But the reason is that's really where most of the liquidity is, and that's where you're going to get the best probabilities of follow through on your moves. So probability of follow through for me personally is simply that when I take a trade in the direction that my indicators are showing me, because the volume flowing in and the activity or the number of traders participating in the auction is giving me the best chance of getting some follow through, meeting some movement in my direction before you start running into this right here. You see this consolidation, you see this chop. What time did that happen? It happened, again, this is, I'm in Pacific time, but my computer is set to Eastern time. So that's why I have 9:30 start instead of 6:30. But here we can see at 12:30 Eastern, you just have this range. And yeah, you could have taken, probably a scalp for a few points. But this to me is kind of choppy. I don't like trading in this during this time. And I'll usually be done way before this happens each morning. I like to trade the first hour, hour and a half, and I either hit my goals or I don't. And if I don't, I just skip it, wait for the next day. Occasionally, I will come in the late towards the end of the session if there's maybe like an announcement from the Federal Reserve or some sort of economic release that didn't get released earlier in the morning. I may come towards the end of the session here just to see if there's any activity, but most of the time I try to avoid trading after the first 2 hours that the market's open. So as you can see, the VWAP right away early in the morning is very sensitive. But as volume increases and trades are executed, it's starting to weigh on the volume on the VWAP itself, and you can see that the lines just start to kind of straighten out, meaning it's no longer as sensitive as it was during the opening part of the session. So from 9:30 to 10:30, 10:30 to 11:30 is really where most of your activity is going to happen. And then the rest of the day, it's kind of just consolidating back and forth by the actual VWAP line. So again, if you're going to trade all day, you're just exposing yourself to more chop, possibly more churning in your account, and I don't recommend it. So if you can do that as your first step is really just cut back on your trading hours, you're going to find that you're going to basically have a lot more balance throughout your day. And I think you'll enjoy it and you'll like that because you'll know pretty much first thing in the morning if you're done. Did I hit my goal for the day? Did I hit my losses for the day? Move on, clear your slate, go review your trades if you want to, and then make the corrections or, adjust your rules accordingly and then prepare for the next day. So as you can see, the first thing in the morning, we did get some fall through to the downside. If you're taking the VWAP right off, a few minutes after the open, it was red right from the open, first candle. This is a 3-minute chart. So again, let me move this to a 1 minute and see. I don't want to mess up I lost my position, but let me see if I can find it here. I think this is it right here. Okay. So as you can see, first few minutes, if you want to wait till the market shakes out these initial, imbalance orders, that's fine. But as you can see right away, we started moving lower. And I'm not saying you would have caught this very first trade right here, but what you can do is anytime VWAP price moves away from VWAP, it tends to return to the VWAP line and that is your first, this would be a first confirmation of a trade entry. It would be a pullback. So in this case, let's see here if I can get some, oops, that's not what I wanted. So swing high to swing low, we get a pullback, and as you can see, this was basically a 50% retracement. So it's an easy way to kind of use that. You don't have to rely on Fibonacci. I'm just kind of showing you this so you guys can use it as a tool, like a ruler. It's a halfway back. So you get this pullback here, and your trade entry short would have been anywhere in here. And again, on the NQ, you'd want to give yourself some room. So where would your stop be? In this case, if you're looking to trade that, you're going to want to have a stop somewhere above the swing high of this entry. So once this candle closes, it closed right here, next candle opened here, you're already away from the VWAP line. So this would be a little bit of your higher risk entry would be getting in on this candle around VWAP and then just putting a stop above the VWAP between 5 and for the NQ, I would do maybe 5 to 8 points. On the ES, I would use a lot less. I would use about maybe 6 to 8 ticks max, 2 points, maybe 2.5 points on the ES contract. And that would be how you'd want to use your or set your levels. Okay. In this case, the lower risk entry would be to enter after the close of this candle, in which case your entry would have been conservatively, your entry would have been somewhere right here, 11,549 versus an entry somewhere in here of 11,500. So not a huge difference here. Okay, but again, this is on a 1 minute chart on the VWAP. Again, this isn't repainting or anything, so this is just showing you how it plotted that day. And I'm just pulling the last couple days. I like to use very recent data, so I'm not cherry picking specific days. VWAP just really makes life a lot easier. So this is one of the main tools that I like to use for trading futures. You don't need to complicate with, like, I don't have anything else on here. I don't even have moving averages on here. If you want to have some moving averages, maybe a 20 period EMA and maybe like a 8 or 9 period EMA or SMA. So you can play around with either one, and then you would have those, and both of those would have probably given you some sort of entry confirmation. But essentially, the VWAP is providing not only the VWAP line, but it's giving me the standard deviations. In this case, our settings are what? Let's take a look. So on the VWAP, we have a standard deviations of 1, 2, and 3. Okay? So when price moves 3 standard deviations away from VWAP, at some point, now in this case, it didn't run right back to VWAP. But when it got down here on the next swing down, it did run all the way back to VWAP. So it's not going to happen every time. This isn't 100%, nothing is. But it really just showing you, if you start just focusing on what you're looking at within the first couple hours, and this, again, all of your trade, this whole trade right here was done. If you're short and you rode this down, there was nothing here to stop you out. Price never retraced back to your stop on either of these entries, if you look at this, okay? So you ran down, you captured approximately, what, 15, 20, 30 points? I mean, 20, let's just say conservatively you caught 15 points on that. Question from Trader Rico. Okay, how do you anchor the VWAP to the start of the day? Sure, so if you go to your data series on the chart, you see that I have, let's see here, 5 days. Let me see here. Actually, this is set. This should be set to RTH, but it's ETH, but it's not affecting it, possibly because the indicator settings are overriding that. So let's go to the indicator, order flow VWAP. Oh, here we go. Trading hours. So I have it set to RTH, see? So this overrides whatever I have in the chart settings, which is great. And that's a very thoughtful thing that NinjaTrader did. See, NinjaTrader 7 would not have had this capability. NinjaTrader 8, however, is far more advanced. They really did a good job on setting this up. So just go up here. You probably have it set to, if you're seeing it all day long, you probably have extended. So you want to change it to CME US Index Futures RTH. Okay? And that's it. And that should fix your issue. Okay, any other questions so far on the VWAP or what I've explained so far? And again, if anyone's in here new to order flow trading, that's fine. Again, this is something we kind of cobbled together last minute. I'm not a professional marketer. I don't have a whole sales course or educational course on this. I'm just sharing and helping people get started with this through Pinnacle Trading. And I really like what Sai was doing with the spreads and the stocks and options. So I thought, hey, it'd be nice to add futures to this. And Sai didn't really want to get into the futures side, so I told him I would help with that. So again, if you're new to this or you've been trading stocks, that's fine. You can use this with stocks. A lot of people like to trade using VWAP with equities as well. So. But again, today I'm going to be showing futures markets, and then if I could load some stock data, I will. But I have a TD Ameritrade data feed for stock data, so it's not very good. It's okay. It might work, so I might be able to run through a couple symbols when we're done going over each of the indicators. Okay, so Traderico, I think hopefully that helped you. Anyone else have questions about the VWAP so far? Okay, well, let's move on throughout the session here. So as you can see, price retraced. If you did happen to take a trade or a short first thing in the morning, that's when you get the most, what did I say earlier? You have the highest probability of follow through, and sure enough, this gave us a really nice move lower, pull back, another opportunity lower from, what do we have? 11,543 till somewhere around 11,519. That's, almost a 30 point move on the NQ. That's great. If you're trading micros, great. That's even better because you're just building confidence with the market. Now that they have the micros available, that's, I think, huge. I had to learn on the NQ, the regular contract here. So when I first started trading, I experienced different emotions losing that amount of money or winning that amount of money on trading just a couple contracts. One other thing I wanted to mention, if you're trading one contract, I do recommend you get in the habit of trading two contracts, whether it's micros or regular mini, because two contracts gives you some flexibility where one contract is not. One contract, you're in or you're out. And as we know, the market doesn't necessarily move, indefinitely in one direction. It kind of goes, it comes back, and then it goes, and it comes back, and it goes further. If you have two contracts, you're able to scale. You're able to scale in, you're able to scale out. So if you're taking some profit on the way down, but you don't want to miss the rest of the run, sell one right here, and you hold on to one for the runner. And that's really where you're going to make your money, is on those runners. So again, I don't have this written out anywhere. You just take notes, write it down. This is kind of stuff I'm sharing that you may not hear from other courses or other people who claim to be traders. So that's just one little tip when you're learning. I do recommend learning with at least two contracts. That way, or if you're trading stocks, in that case, you want to say if you're trading, I guess stock's a little different because usually you can trade one share, you can trade 10 shares, but do it in increments that you can scale in and out equally. So if you're going to do 10 shares, see if you can do 20. With futures, if you're going to do contracts, do at least two, so that you can always have something to scale out of. And then what you do is you trail your stop with it, and as you get taken out of one, you bring your stop down to that area or near it. And then if it moves further down, you can trail that stop further, or it'll come back up and take you out of the trade completely. And then you move on to the next trade or wait for the next setup. That's probably the better way to trade than trading one all in, all out. Okay, so again here, as you can see, market gave some pretty good moves to the downside, but this whole session was red. The VWAP line was red, meaning price was below the VWAP, except for a little bit of time here. We had maybe 5 minutes here where it kind of chopped or consolidated before it broke low and then retraced right back up to it again. So let me clear this up. Okay, any questions so far on what we're looking at? No? okay, the delta here, I didn't really mention this much because it didn't really come into play. Again, you're not going to use every indicator that you have in there, but if you can use it to confirm, great, but it's not always going to come into play. So in this case, market was selling. We didn't really have any indication except for the delta was negative. It was negative all morning. If we look here, 9:30, what do we have? We had negative 400. Okay, that's negative. That's bearish. So if you want to look at this, see where we're at on the delta, that confirms the bearish bias. And again, it just kept going from less negative to more negative on this. And then it finally retraced. But look, it's still negative. Even through this whole session and this whole bounce from 11,513 to 11,546, the cumulative delta is still negative overall. So unless this thing was going to break positive, which it didn't go positive until about 11 a.m., at which point hopefully you're done trading for the day. But let's say you're still trading and you want to trade this signal here, it broke above the VWAP. Now you could trade a break of the VWAP. That's a higher risk trade because sometimes it'll turn into chop. But in this case, it did pan out, and you got to move from 11,530 to 11,552. But your confirmation right here was what? Look at the delta. Okay, we just broke over zero. Here's the zero line. Let me put a horizontal line here on the zero line so you guys can see where that is. Okay, that's approximately the zero line. Okay, so this whole morning we were negative. We were below zero on the cumulative delta. And when we finally broke out, look what happened here. Price broke up right through the VWAP line and went all the way up to the second, almost the 1.5 standard deviations. So again, this would be a little bit higher risk. You'd want to get in on a pullback. But let's say I don't trade breakouts. Let's say I only trade pullbacks. So I take my fib. I can put my, let's do a swing low to high. So in this case, there's no opportunity there, but let me do that one more time. And let's see from the break. Okay, we didn't get a pullback on this breakout. Kind of broke out, moved higher, meandered here. So let's see here on this swing high. It just really didn't pull back, and it didn't pull back to VWAP. So in this case, I might have skipped the trade. Well, I definitely would have skipped the trade because I'm usually not trading by 11. But let's say you did want to trade at 11 a.m. It was just a higher risk trade. So you could take it, but again, you're asking for a lower probability of profit. But in this case, it would have paid you. It's not going to pay you every day that you see that, though. So just remember that when you take those, okay? DB has a question. Stops are always getting hit and taking you out, especially in the ES. So can you do a wider stop? So right now I'm looking at NQ. Let me pull up an ES chart. Well, let me go through the NQ and then I'll address the ES because they do move differently. Okay, so I wanted to show the NASDAQ first because that seems to be very popular with people. And then I'll jump over to the ES, which is also very popular, but I just didn't have a lot of screen space. Okay, so this was just using the VWAP, guys. I didn't even look at the volume profile yet. So let me just verify here what I'm looking at. I'm looking at 9:30 in the morning on, what's my, let me get my trade data box here. Okay, so this is October 8th, right? Okay, now let me jump over here. Let's pull up the volume profile real quick. See if this works, hopefully smooth. Okay, actually, this is micro. Let me switch to the NQ. Okay. All right, guys. So let me make sure I'm looking at this. Says October 7th. That's not right. So we want to look at October 8th. So I think this is the data we're looking for. Okay. So all I'm going to do with the volume profile chart, keep it very simple. Can you show us the VWAP works in real-time market replay, you mean? I could do that, but let me go through each of these charts first, and then I'll try to do the replay data. I'll see, because I don't want to slow it down too much, and then I want to show you guys all this for today. I'm trying to keep this short. I don't want to keep you guys on here. It's Sunday. Everyone's got things to do. I just kind of wanted to go over these, and then I'll try to do maybe a replay video separately. But yeah, I mean, I'm happy to do it. I just want you guys to get some sort of understand my thinking with these different charts. So I just want to make sure I'm looking at the right data, because this says October 8th. What time? Okay. So I want to get to the morning session, 9:30. So here's our start time right here, guys. Okay. And sure enough, this is a 5-minute chart. So if I move this to 3-minute, maybe it'll look a little better. Maybe it'll look more familiar. Okay. So this was that move first thing in the morning. And all I kind of wanted to show you on volume profile is I'm looking at the last couple days, and what I'm doing is I'm literally drawing areas that were the highest traded areas. So I have right here, okay, this is the 5th and the 6th and the 7th. So I'm just showing you, again, you can do this yourself, so you can see that I'm not cherry picking. I'm just pulling the most recent data. Okay, so here's the highest area traded on I believe it was the 6th. So I'm going to draw a horizontal line, boom, right there. I'm going to drop it. Then I can drag that right there. I'm going to take another one. We can see price hit a high, could not trade higher on the 6th. Looks like right around here. And then you want to be selective. So you kind of want to look at the highs. You want to look at the highest volume traded. In this case, we have this area here on the 7th. And that pretty much delineates the area of interest to me. Okay, because we're looking forward. So again, each day you want to go through and do this, and then the next day you're going to see how these levels play out as the market's trading. There's one more right here, so I'm going to draw a horizontal line, go to the drawing tools, horizontal, and then I'm going to drop it right here at 4:30 or so. Okay. So again, this is moving forward, and then our composite profile is over here, also showing us what areas were heavily traded. You can add a different color line to show a 2-week profile if you want. So let's say you wanted to separate them so you know what areas you're looking at. Your daily profiles, it could be this yellow. And then if you're going to use the composite profile, I'm going to change that to let's say, magenta. Okay, so that way I know when I'm looking at these as prices moving through these levels, which area it's hitting. It's hitting a 2-week composite high, and that's an area of resistance. It's going to take a lot of auctioning or a lot of activity on the buy side to get past that level. And so that's one thing. You can separate, color code them, drop these levels on there. That's really all you need to do with it. It's really giving you a great indication. Yes, you can use this intraday as volume profile as it develops, but there are multiple ways to use the tool. So that's one way, is to use it intraday and see where the volume is developing and trade off of those areas. If it hits a high, you're going to go short and back to an area of low activity or low buying, low selling, where price was rejected, like here, this area right here. Let me show you. You can see here, people did not want to trade this price. It either went higher or it went lower to the next area where it was accepted. Price was accepted 11,429 and 11,497. Those are the range. That was the range of areas. And as you can see, as price moved through this area, it did consolidate here before it broke out, and it totally bypassed this 11,450. Just they did not want to stay here. So again, you're going to trade off of these areas, but again, if I'm telling you to focus on the VWAP, let's see. 1, 2, 3, Jorge, you don't see the screen. Has anyone not seen my screen? I'm doing a screen share, and yeah, Jorge, check everyone else can see it, so it's got to be your connection. You want to jump off and jump back in, maybe that will help. But I can't fix it. There's nothing for me to fix on my end. So just log out and log back in. All right, so anyways, now we have our areas here. Let me get rid of this data box. And you can see here, now we have our levels, we have our areas. Now, I'm fine leaving them there, but let's say you want to move these levels down to your VWAP chart. You can just copy the levels, or you can drop horizontal lines at these price areas for the day. First thing in the morning, 15 minutes before the market opens, drop these levels. They're already there. These are already have occurred, and we already know where the auction and where the interest was. So you can take these and just move them down to your VWAP chart, and you can drop them in here, and then you can start using that as your areas of support and resistance as well, in addition to maybe pivots or anything else that you might be using. And this is just a simple addition to the chart. Again, we're not overcomplicating things. We're not adding a bunch of indicators with buy and sell signals. Price tells you everything. Volume and price are really what's most important. Somebody asked earlier, some use market profile. Which one is more significant? I've used both. I have both, but they work a little bit differently. So volume profile, in my opinion, may be a little more relevant to support and resistance areas, whereas market profile is almost like a trading system within itself. So on a market profile chart, as the profiles start developing, and let's say you get a tail on your second hour, your second 30-minute of trading, most people would use that as on a high. If we're getting single prints on market profile, they will use that as an opportunity to short. If we're moving and getting single prints and forming a tail, because they know that that's somewhat of a buying, exhaustion in buying. Whereas with volume profile, you're not really looking at that. You're looking at how much trading has taken place at a given price level. Okay, so there is a difference. Maybe you can learn to use both to confirm your trades. So if you see heavily traded areas, and those are your areas of support, resistance, and you coincides with the market profile area of single prints, then you could use that to maybe confirm your trade short or your trade long. And that's how I would look at it if I were, that's how I would try to use both. Excuse me. So you can use both, I think. But you got to start with getting comfortable with each one of these before you add too many at a time. So yes, you can build all these charts right away, but don't try to use them all at once until you get really confident and comfortable referring to each of these and knowing what it's telling you. The VWAP is not a magic bullet. The VWAP is simply showing you where people are executing trades. It kind of operates like a moving average in the sense that it tracks where the orders are coming through. Well, the VWAP's red right now. Why? Because we had a selling coming in, selling coming in. These are 1 minute candles. Sell order, sell order, sell order. Cumulative delta was negative, negative, negative. So the VWAP was trending lower. But price is going to have to revert back to that VWAP as buy orders start coming in. And that's what happened here. Back to VWAP or back to zero, however you want to look at it. And then we stretch back out to 2 standard deviations. But it's difficult for price to stay, that far away from an average. So it tends to revert to the mean because that's the way markets move. They just have a flow to them, and that's how they tend to move. I hope that helps with an explanation, and I hope that makes sense what I'm showing you. I'm trying to keep it simple, but also delve into some advanced concepts that you don't really hear people talk about. Okay, and notice I don't have any other indicators on here, guys. I don't have moving averages. I don't have oscillators. I don't have, you name it. I've seen every indicator on earth. So if you guys want my opinion on an indicator, I'd be happy to answer that, later on. I've tested it. I've back tested it. I actually helped design an indicator that went into trade ideas at one point back when I was trading with a firm. I've seen them all. Trust me. Okay, let me jump over to the market depth map, or what's known as the footprint chart. Okay. Now on this one, let me see if I can pull up the day I need, because okay, here's the 8th at 2 in the morning. So we want to go to 9:30. Okay. Okay, so here's the open. Okay, guys, same selling. What do we have? This is that same area. I'm trying to show you guys the exact same place with each of these different charts so you can see how it would have looked on all three. So I'm trying not to jump around too much from that. I'm going to have to, again, this is an indicator that, again, you really want to, it really works best in real time as the markets are moving. Okay, as you're learning how to use these, I recommend trading in sim until you get the hang of it or until you feel confident. But here's the open, 9:30, what is that, 9:31, okay, 9:30 a.m., here's the open. Right away, this would have started. Now, this may not have looked like this. This may have looked, because these orders hadn't taken place yet, right? So I don't want to after the, hindsight, trade this too much. But I just kind of want to show you how price developed. So right off the bat here in the morning, the footprint chart is showing you all the trades coming through right at the open, first thing in the morning on the NQ, on the bid side, and on the ask side, okay? This was the volume most heavily area traded right here, volume-wise. That's why it's highlighted in yellow. Okay, and your chart should look like that. If it doesn't, you just have to copy my settings. And excuse me, let's see. These are the settings I have right here. So take a look at yours. It should look pretty similar to this on your charts. If you guys want to take a screenshot of that or whatever, or you can just watch the replay later on, that's fine too. Okay. So volume based on percentage, 80-20, opacity. Okay, all these settings are pretty straightforward. There's nothing here. Delta. I enabled the delta here, and that should look like this. So order flow cum delta. Actually, that's down here. Sorry, it's down here. Okay. Data series would have your settings here. Okay. Volumetric, minute 1. Okay. And then show volume. That's this right here. This is the volume. And it's going to show you the highest volume traded. This is maximum volume is yellow, as you can see here, yellow. Okay. So, and then cornflower blue is just the volume. So this was the highest volume traded at each candle. You can enable that if you want by showing this show maximum. Okay. Any questions there? No, looks like everyone's on the same page. Okay, great. And again, Anjan, anyone else, if you guys don't have these charts already set up, I can send you the links to get the charts set up. So, and then you can copy the settings I have to look at the same thing. Okay, so I just want to get this 10:08, 9:30. All right, so let's move forward here. Next candle. So as we can see, we sold off immediately to the downside, and we have a confirmation on delta, negative delta percentage is about 8% from the open, and we have a cumulative delta, negative 700. Okay, so this confirmed negative. So I'm just going to highlight these areas. I don't know how, let's see, draw. Can I draw this? Sorry guys, I want to try to highlight these areas here. Oh, that's not going to work. Okay, I can't draw over this. It's like some sort of overlay. So I can't draw on this, but I wanted to point out that we have a confirmation to the downside on the orders, sell orders coming through. We have negative deltas, and then we have the cum delta indicator separately below also going negative, right? Here's the zero line right here. So let me drop a horizontal line here at 0. So complicated to get 0. Okay, let's anchor at 0. You can type that in, and okay, there's 0. Okay, so right off the bat, right at the open, we were already below on cumulative delta. Okay, so let's move down. Next candle, we're still below 0. But you're really paying attention to, on this, just the orders that are coming in. If you start to see a lot of selling coming in, you're probably going to get some follow through there on the auction. Again, this is one of those indicators that really just looks better when you are in the real time in data. So I'll try to do a replay on this. I don't know how it'll look because I'm not sure how well the replay data will capture this, but we'll try it. We can try it after. Okay, let's move forward. Okay, we're still testing the lows, new lows. This is kind of showing you the trend. Okay, it's trending. Here we have number of trades, the volume on those trades, and we have in high amount of sell volume, a little bit of buy volume came in. Here the sell volume took over, more sell volume. So we're probably going to get a continuation lower, as we recall from the VWAP. And again, you're confirming this with your other charts. So you have the footprint chart trending lower. Your VWAP already told you that we were going lower. So really the lowest risk entries was to take shorts on this part of the session. And that's what you're focused on. You're seeing this in real time though. So I know we're going over this after the fact, I understand. So I just want to make you guys aware that this is what it will look similar when you're running it in real time because you'll see the price developing. Okay, no other indicators do this, meaning no other lagging indicators. Moving averages don't really give you this kind of insight into a candle. Like where else are you going to go? You can have a volume indicator down here, but what does that really tell you unless are you going to sit there and look at every volume? No. When you can go right here and you can see the statistical data on the candle, it's showing you how many sell trades are executed. These aren't pending orders. This isn't level 2. This is actual trades that have been filled. 2,000 contracts, 900 contracts, 780 contracts, 1,300 contracts. Do you guys see the advantage? Any size of question from ARC? Any size of the delta that we should pay attention to? So that's kind of I want to say a subjective question. Here's why. One, we don't know what's going to trade every day, right? We don't know what traders are the big banks trading every day. Some days they trade light, some days they trade heavy. So there's no way for us to know that, and there's no way for the indicators to know that. So to say, well, look for this delta every day, to me would be inaccurate. And if anybody tells you that, oh, well, just look for delta to go, to a certain area, I say that's just a guessing game. We don't know. It depends on how many traders are participating that day. Because if it's an active day, if Trump is coming out with some major announcement for the economy, guess what? Those delta, everything's going to be skewed. So then if you're focused on that delta and you don't get it, or it's way beyond that, you're going to say, well, it didn't really work that day. So I would say focus on the activity for the day. If it's a light trading day or you're seeing a lot of chop or consolidation, then pretty much anything over the average values should be paid attention to. In this case, what do we have? Delta percent. Let's focus on delta percentage. Okay, if the open of the delta opening bar was 4%, negative 4%, I'm already using that as my baseline for the day. Negative 4%. Well, what happened on the very next candle? We doubled. Negative 8% on the close of this candle. That tells me right off the bat, sellers are coming in. Sellers are taking over. Sellers are serious. And then right after this 8% move, we got a 9% positive swing. Excuse me. But my focus is still negative. This is just a retracement, in my opinion. So we're seeing buyers coming in, but there's still a lot of selling. We had 1,100 contracts to the upside, 900 on the offer. Okay, so what's happening? Sure enough, the next one we dropped to 7, and then from 7 back to negative 7. And what happened? We trended lower. We kept moving lower. We went from 11,565 to 11,548. 45, 20-point move in 2 minutes? So right off the bat, the delta is giving you kind of a clue. Okay, this delta is negative after the open, negative 4. So set 4 as your baseline for this day, and use that opening candle as your baseline for the rest of the session until price shows you differently. ARC. So I hope that answers. Does that make sense? Because there is no single correct answer. If I tell you, oh yeah, look for a negative delta of 10, that's the golden, that's the golden number. Yeah, I'd be bullshitting you. So it really depends on the session and remember, this is the NQ. On the ES, it's going to be a different number, possibly. So depending on the market you trade, on crude oil, it's probably going to look a lot different. Crude has a lot less volume. So some people love to trade crude, but crude has the statistical data on crude is going to look a lot different than the data on the ES or NQ because, well, one, it's a different market, but two, there's just less traders participating in that. There's not a lot of crude oil traders. Usually it's energy companies. Their trading desks tend to be a lot smaller than the equity side. So that's why the indexes trade more heavily. It all kind of makes sense when you think about it on a bigger scale. And then you have other futures markets like soybean and coffee and natural gas and those things, right? So it all depends, I guess, is the only right answer. But now that you know what we're looking for, you have a tool that most people who look at this wouldn't even know what they're looking for, right? I don't know what I'm looking at. I just see trades. Yeah, that's great. I don't know what this is. Well, if you combine that with the information provided here, as well as what the delta is telling you on this candle, this is just showing you that most likely our bias is to the downside, at least for the first part of the session, and then until buyers decide they want to step in and take prices back up. Okay, so that's how you would approach this. That's how you would look at it. Again, I know it's not that helpful, guys, when you're seeing it after the fact. Again, this isn't hindsighttrading.com, but in a sense, we have to kind of first grasp the concepts of the indicators, and then you start looking at it in real time, and then you'll know what to look for. So trade detector, it's not much I really want to focus on this other than to say, only because I'm looking at a 1 second chart, guys. So I recommend you load this indicator up, run it, and you'll start to see the buy and sell trades. I'll show you my settings for it for anyone who didn't see it the first time. Okay, here are the settings for the trade detector. You simply add it, trade detector, double click. I think I have it set to minimum volume is 50 contracts, maximum 500. That's for NQ. So if you're going to make one for the ES chart, and I do recommend creating separate charts or separate workspaces for different markets. That way you don't have to alternate and you don't have to adjust the settings every time. So whatever you have for NQ, leave it set a certain way. Whatever you have for ES, you're going to adjust those settings accordingly because it trades differently. So for ES, I would probably change this to 10 because 10 contracts on the ES is actually, decent. And my maximum would probably be maybe 200 contracts or 300 contracts. Or I could still put 1,000 contracts just so I can see those big trades if they come through. But 1,000 contracts on the ES is, that's a big order. So, but the minimum, you definitely want to lower that to like maybe 5 or 10. Okay. So that's that. There's really nothing else here. Show values on hover. I have it checked. And visible should be checked. Okay. That's it, guys. So that covers the trade detector. Any questions at all on the charts that I went over? Oh, question earlier, DB. So the sell by volume on the bars would be a good gauge to take a trade on the depth map. The sell by volume. Let's go back. Excuse me. Sell by. Sell. Are you talking about here, the sell volume bar or row, DB? Okay, so you could look at this. I wouldn't take trades off of that because look what happened here. Look, we got if we go back to our opening candle, right, 930, and then here we had sell volume of 2,000 contracts. I mean, there's definitely a bearish indicator, right? But this number wasn't there when this candle opened, so you didn't know this was going to happen yet, right? All we know is what happened before, which was 200 contracts sold, 200 bought. Almost even. It's almost, almost the same. Slight bearish to the, slightly to the bearish side, -4% on the delta. So the next candle, we were kind of waiting. We're like, okay, is this going to go short or is this going to reverse and go up? We don't know yet. But as price started selling and more selling the pace of the selling picked up, this started to, the selling started to take over here on the statistical data. So we saw a delta change of -300. We saw the cumulative delta negative 744, which this cumulative delta value should be similar to this sub indicator here as well. So keep that in mind. And then when this closed, we knew it was -8%. So now I'm paying attention. Now I'm like, okay, my focus is to the downside. But what do you think is easier, to take a trade off this? Or now that you have some sort of a bearish confirmation, just run over to your VWAP chart and trade off of this? To me, this makes more sense. But now you're looking for bearish, but do you want to get in on a selling candle or do you want to wait for a pullback to VWAP? That would be my setup, would be to wait for a pullback to VWAP for a low risk entry. Okay, so if you want to write that down as a setup, pullback to VWAP on the first test of VWAP. So it broke down, this would be considered the first test. Okay, not retest, but the first test of the VWAP. That's my short entry. And my stop above that. How much you want to give it is up to you, but I would recommend at least on the NQ, at least 5 points, if not more. Some people like to use 10-point stops on NQ. On the ES or the S&P, the ES contract, I would use maybe 4 ticks. Remember, a quarter point per tick. So I would use 4 to 6 ticks or 4 to 8 ticks. Some people like to use 4-point stops on the ES. Your odds of getting stopped out drop if you widen your stop, but you do risk losing more per trade. So you have to adjust your trade size accordingly so that you're not sweating bullets when it's going against you. If you're freaking out that you're down 2 points on a short entry and it's not going your way, but you're only down 2 points, that means you're trading too big for maybe your account size. And if you're like, well, I'm only trading 1 contract, well, then you need more capital in the account because it shouldn't scare you. Okay, so if you're trading minis, you want to have at least ideally 5 to 7,000 per contract in there. If you're trading micros, I would say at least have a few thousand in the account, even though you're trading micros. That way you can relax and just let the trades work out. If you're like, well, I only have 1,500 in the account, then my advice would be don't trade yet. Don't trade live at least. Just save up, keep putting a couple $100 in the account until you get up to like, $3 grand, $4 grand. And then again, that's my opinion. So, but you have to trade what's safe for your risk capital. Does that make sense what I said there, DB, on the volume bars? It's more like a confirmation. So
Yes.
I wouldn't trade off of the footprint chart. I do like to see it though, because I like this. I love the data it tells me here. This is great. Guys, before NinjaTrader 8 offered order flow tools, and DB, you know this firsthand, you had to go buy this stuff from somebody else. There's no end to companies that were selling this stuff for like $3,000 add-on. I mean, you're already paying for the platform. So when you go and drop another 3 grand, 5 grand, I've seen packages for $10,000 for indicators that tell you the exact same information that you're getting here. Okay. I'll share it. So I shared a setup with you guys. I hope you guys wrote it down or go back and watch the video. That's just a pullback to VWAP. Very simple setup. You can use a 1 minute or a 3 minute, 5 minute chart. Try to keep it, if you're going to day trade, try to use smaller time frames. You can also use tick charts. For the NQ, I like 233 tick chart. For the ES, I like a 512 or 500 tick chart. That seems to work pretty well. So you can test what you like better. And those are easy to change here in the settings. Go to tick. You can set it 233 for NQ, or you can do 512 for ES. Let's look at the ES chart real quick. Okay. Here's another volume chart, volume profile chart. Let me see what else I have here. This was just another way to look at it with volume overlays. I'll get into this more maybe another time on another video. I'll just record it and post it. You guys can watch it if you like. But I don't want to drag on. It's what time is it? It's 2:15, guys. So I've already been on, a little over an hour. Any questions? I know the rest of you want to get about your day. Go on about your day, but feel free to send questions in the chat or message Cy and he'll forward them to me, or you can DM me on the Pinnacle server and I'd be happy to go over further. But I'm going to end it here. And then is this a TOS add-on or a platform of its own? Oh, AltaVista, no. So this is NinjaTrader. It's a different platform. This is this platform right here, NinjaTrader. You can download this for free, okay? But you won't have access to the order flow tools unless you lease or buy the platform. NinjaTrader is primarily a futures and stock trading platform. That's what they're known for. But I'm just kind of getting people started. Yeah, that's okay. So this is going to be recorded, so it'll be uploaded. Feel free to rewatch this if you're interested. And if you want to get the platform, Cy has set up a link to NinjaTrader where they'll put you in contact with somebody through Pinnacle and you get some sort of deal on the platform if you don't already own it. So, but I think you can trial it. You can definitely evaluate it for yourself. But Thinkorswim does have similar. Actually, Thinkorswim doesn't have all of these, but they have like volume profile and market profile definitely. So you can get those indicators through Thinkorswim, absolutely. But yeah, so we're just reviewing some futures today, and I wanted to show them how I have my chart set up for futures and some of the things that I look at. So this one, there's not really much I can share with this one here. The levels are this is the value area high, value area low, point of control. But it was just a different way to look at the volume profile here. So these are similar. I think just this shows buy volume in green and sell volume in red. If you want your volume profile to look like this, I can show you the settings I have. here. So this is label order flow volume profile. Profile type is volume. Display mode is buy and sell. So this is actually showing the buy and sell orders. And the deltas using the bid and the ask. One session. Everything else is default. Show value area, show point of control. Okay, so you guys should be able to do this pretty easily, but it'll be on the recording. And I think that's it, guys. If anyone has questions, is there a chat room for debit and credit spreads? So Sai runs the credit spreads, and yes, it's part of the course that he has. Again, he puts the alerts for free. So he'll actually alert trades for free. So you don't have to buy the course. But if you want to learn how he's finding the trades, I recommend buying the course. It's pretty cheap. I don't get anything out of that. That's Sai's deal. But he's very patient. He answers all the questions. He walks you through the trades. And his results have been really, really good. So it complements futures. I think if you guys are only trading futures, you're missing out on another area of the market that you can make some money in. And the nice thing is once you put the spreads on, you don't really have to do anything. You just let the trade, work out. It's either going to go your way or it's not. The worst thing you have to do is either close out, the option, or let it expire, or roll it over to the next expiration. But it's something that you could add to your portfolio of trading strategies. And maybe, if you're having a good week in spreads, you don't have to trade as much futures. If you're having a good week in futures, you don't have to worry so much about the spreads. But I do think it's worth looking at both, and they're uncorrelated in a way. So it's a great way to diversify your trading overall. Yeah, no problem, Trader Rico. Any questions? I know I didn't go into the replay, so I'm going to end the official thing here. I'll keep recording. But let me try to load up. Let's try to do. I don't want to waste a lot of time. I have to figure out how to do the market replay first, Rico, and then I'll do that. I'll either record it or I'll do another live session with the market replay. Because right now, let's see. I honestly haven't used replay in a long time. I think I have to download. Do I have to download data first? Let me figure it out, and then I will. Tuesday. I may be on Tuesday. So yeah, if I'm on Tuesday, I'll load up a live screen, or I'll launch the live chat, and we'll see how the market's moving first thing in the morning. But add this to your tools if you guys are already making some profit trading futures. These are some additional tools without cluttering your charts too much. If you haven't been consistently profitable, or you're inconsistent, or you have some winning days, some losing days, maybe take a step back and see if you're over trading. Maybe you're trying to trade all day long. Maybe cut your trading down to the first hour or two in the morning. And if you're either done, either made your money or you didn't, and you just move on to the next day. That's my suggestion. And I think you have everything you need here to do that. The only other thing you could maybe add is maybe moving a couple moving averages to a blank chart like this, like an 8 and 21 period, and just let's see where price is following the 20 period, bouncing off the 20 period, and use that to confirm with your VWAP, with your market depth, with your footprint. There is not a whole lot else you really need to worry about. There really isn't. I know there's dozens of strategies for trading, so I'm trying to simplify it for you guys. And if it helps some of you, let me know. Post, just definitely post some comments if you're finding that this information has helped you. If it's not helping you, let's figure out why, because I can't massage this information any further. It's like there's nothing for me to manipulate on this. What you see is really what it is. There isn't. I can't repaint these charts or anything like that. So definitely look it over. Try to start to absorb it, and I think you'll find it'll be helpful to your trading overall. I know it was helpful for me once I got away from the lagging indicators, and I used to have tons of averages and Bollinger Bands and Keltner channels and everything, and to me it just complicated my trading. and it made things more difficult. I will try to figure out how to get a market profile chart so I can load that up as well and maybe show you guys how to use market profile along with these other tools. And I think that's pretty much it. I don't see any other questions, so thanks guys, appreciate it. I'm going to stop recording now.